The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances.
Hello, everyone. My name is Derek Doyle. I'm an associate advisor here at Ullman Associates in the Rhinebeck office. In today's video, I'm going to walk you through a blog I wrote last month titled Narratives Move Markets, AI is Just the Latest One. Behind writing this article last month, the kind of opening idea that I was, brainstorming when writing it was throughout history, markets have always moved on stories, and right now AI is just the biggest one dominating the markets. Some key points that the article goes on to kind of explain why AI and artificial intelligence is the biggest one is since ChatGPT's launch in late 2022, AI has kind of really dominated the investor attention. Nvidia hit record $4 trillion market cap in 2024. Oracle secured a $300 billion contract from OpenAI, the largest cloud deal, in the industry's history. Massive capital and hype are flowing into AI, but this isn't new. Every era has had some sort of market story, leading the charge. Markets have always run on stories. The stock market has always been shaped by, powerful themes. Examples being in the 1980s and 90s, the consumer and retail boom. We saw that baby boomers were entering their peak earning years. Also with the rise in dual income households, so there's more spending going on. Companies like Walmart and Target really transformed retail and that whole entire industry. Then that kind of flowed into the late 1990s and 2000s, where we kind of had the dot-com era. The internet drove huge valuations regarding the optimism around all these companies. We saw startups like Amazon, eBay, Google, all kind of emerge out of the shadows, and markets soared, but ultimately just to crash when that bubble had burst over the overexcitement and investments into these companies. Then we kind of get into the 2000s and the 2010s, where we kind of had mobile and cloud computing. After the dot-com, it was all about mobile, and we saw companies like iPhone, Facebook, even Amazon Web Services. They really did reshape how we connect and speak with each other, whether it's shopping, work, things that made up this time period were the iPhone, and just being able to communicate with each other virtually with apps that had never really ever been invented. So this kind of ties into today's theme. Today's theme is artificial intelligence. Now we are fully blown into the quote unquote AI revolution. AI requires enormous computing power, fueling demand for industries like semiconductors and data centers. The biggest beneficiaries being Nvidia, leading the hardware side of the semiconductors, and with Microsoft, Amazon, Google being major cloud providers enabling AI growth. Since ChatGPT's release, the top 10 stocks have dramatically outperformed the broader market, mostly due to this AI exposure and the story behind it. History shows every major market expansion is tied to a narrative and a major technological shift. So this is just the latest one that is kind of driving the markets. So are we in another bubble? We've heard the word bubble, floated around multiple times in the news regarding what's going on with the AI story. Many companies today are compared to dot-com level, companies, but there are many differences, but there are some similarities as well. Some of the similarities are obviously the high enthusiasm, the fast-growing valuations, and the concentrated market leadership at the top. Some of the key differences is today's companies generate real earnings and real cash flow. The top sector, which is tech, trades around 29 times forward earnings compared to nearly the 50 times during the dot-com peak. Nvidia, for instance, has the financials to justify where this optimism is coming from. So yes, valuations are high, but this cycle is a little bit more grounded than maybe the fundamentals that we saw during the dot-com, which was a little bit more just pure speculation. So what does history tell us? Market cycles are driven by narratives, and this is just the latest one. They also repeat a lot of patterns. Each wave of innovation starts with excitement, attracts the capital, and eventually normalizes. Investors tend to overreact. The best strategy has always been diversification. It keeps you balanced, helping you avoid both the fear of missing out and also the pain of being wrong. So, the lesson, don't chase trends blindly and focus on the long-term view as an investor. There's also a deeply human side of investing. Markets are emotional because us investors who participate in them are human. We naturally seek for patterns and to try to make sense of what's going on around us. Behind every story, there are both believers and skeptics. Believers, the ones who buy the narratives that things are going to be great, and then the skeptics who doubt this is really going to transpire. Just like in many areas of life, it's hard to not pick a side. Investing should not be an all or nothing approach. Avoid the regret of missing out and also the fear of being completely wrong. Smart investing does not require choosing sides. Diversification helps balance both perspectives. It reduces regret and risk and supports long-term growth. So some key takeaways from this video and the article I wrote. Every market cycle is powered by a story. It's simple as that. Narratives move prices, and the best approach is to always stay invested for the long term, stay diversified, and stay informed. Remember, working with a qualified financial advisor helps ensure your portfolio stays aligned with your long-term goals through every market narrative that comes and goes.
Thanks for watching. If you found this video helpful, give it a thumbs up and hit that subscribe button so you don't miss future updates. Looking for more insights like this? Head over to our website at jgua.com for additional resources. And if you'd like to talk about your personal financial goals, we'd love to help. Just click the Schedule a Meeting button highlighted on your screen to book your complimentary consultation. Thanks again for joining us. We'll see you in the next video.